Because like those moves against the market right there, they were like, oh, we're gonna drop, what, we're gonna drop, what, we're gonna drop. You better watch out, better freak out, better sell everything or short it. And I'm like, those are both wrong decisions. You know what I mean? But who's buying into it? You know, hardly anybody. Nobody wants to take profit up here because everybody else is thinking it's going to go down. And this is where I just got filled. A bunch of my orders just got filled. But this most recent manhandling of the high, that I did really well. Like I even managed to buy the pullbacks and absolutely put more orders on the top. Like if most of them are feeling the same way about something, we can really use that to our advantage. Like if they're all bearish, that would be great. Like the institutions right now wish more people were bearish so they could take advantage of them. That's the vibe I got. But they're like thinking, how do we make more people short it? Like, should we make one of their favorite patterns? I know we just threw out a head and shoulders. What if we make an even clearer one? Do you think that'll get more people? But they're wondering right now. That's what's going through their head. And they just went for people's stops again. Huge stop out, buying into the highs, like I said. You know, like this is the kind of action where they're ridiculously going for people's stops. That was round 2. It was like, successful round 2. Just stole a bunch of people's money. There we go. Excellent. Half the people are short, and you could tell that was directly at their stops. But ever since this happened, I mean, we've been dandy. Been nothing to threaten any positions exposed to that. Like if you think about where we are now, we've managed to go so far that we're at the 127, 141 to the 61 that was down here originally. So this is the 61. Can you see how the 141, 127 managed to break it down to the 61? That's the next movement that we managed to do on the break of that trend. Obviously we have a new trend. So now that we've made a 61% retracement, we can take a look at what it would look like to make another 61% retracement. That would be all the way up there. I wonder if we're going to make an even larger head and shoulders with the movement that we have right now. Work on a right shoulder. And it's not like we won't get a working head and shoulders again in the future. I'm sure we will. But it will be long after the failed one. Like, do you think it's ironic that originally, where we were at that 61, right there, that 61 is this 61. And that 61 is the failed right shoulder, isn't it? So at that level right there, people will have shorted it, and they'll have been down or taken losses from shorting at that level. Now, in the future, when we come back down to that level and then bounce off of it, it doesn't really give them a chance to take profit. Are they in control right now? Because of this big move, do we think they're in control? Remember, when they shorted, it was here. This isn't a movement to give them control. It slapped them on the head and was like, maybe if you were quick enough, you were able to get off with break even, but in control is far from what I would call them. If people are still trapped like that, and all we do in the future is make head and shoulders fall down to the point where people were trapped last, it's not really helping them. Like it lets them off a little bit. Geez, you know, some of the professionals can get out if they were stuck perhaps, but at the end of the day, it's still another squeeze. And as of now, like we can say that this does exist right now. Like it does exist. That right there, where there's equal portions on either side of a spike. And just like the last head and shoulders, the right shoulder is coming up to the 61, but not quite at it yet. Just for some perspective. Just remember that the trades inside of the middle of this range are not as favorable as the ones from the extreme of it. The 61 is getting squeezed. We could test it from above. I like the idea of kind of dancing on it for a second, but it would be nice to collect all the stops and then go for the high. Like a stop killer like movement could be inbound. They're still rounding people up at the 61, little do they know. Thing is though, is they're playing with fire, because when they dump it like this to the stop killers, they're letting people take short profits. But I guess there's not a lot of them, or they wouldn't allow for it. Because what's funny is the thing that everybody wanted to work here failed. Now it can work without them, because they're still stuck in here. Doesn't matter if it works back down to where they got. I'm like, it's interesting because we are going for those stops in the middle right there. Like, it is true that this is what it decided to do. Not quite a 61% retracement. But like I said, no stops are safe above the 61 in general. If you do have a position, it should be more than profitable and easy to withhold this entire environment. Most attractive trend is here. Next to it, one at the very high, which is very similar. And it's ironic too, because the 61s that have been telling us to go down haven't really been working well. The most working one is going to be this one that honestly came down with a fight. Like an inverse head and shoulders is trying to form on the 5 second. It's just funny to me to see that, you know, so many people know that thing and it's not working for any of those people. Yet when people learn that thing, they got all excited inside thinking that they understood something that they can actually use in the market. Typically, when we pass B points on the short term, it's not uncommon for us to test them as we pass them, but it doesn't mean they've played out. Okay, so just because we test them from these like tiny levels, like think about this big one for instance here. You know, is this considered tested because it came back from which fib? I mean, it didn't even get to the 127, let alone the 200 or the 261. So how is it considered played out when there's been no fib to reverse it back to this point? This wasn't even used, is the argument, right? You know, because somebody might think that that's actually played out, and they're like, "Oh, done." You know, I'm like, no, it's not done. And geez, could we ever hit it 100 times and be like, oh, somebody could say, oh, it must be hit now, right? Look at all the times we hit it. And they would be right that, yes, sure, it's actually hitting it, but it's not from a fib. So it's not played out from anything. Like, these levels are still equally a risk to take us down in the future. Even though this one did it 100 times, doesn't freaking matter. You know what I mean? So, the other side of the range is the most attractive spot, red zone. You know, so regardless of, even in a hypothetical situation that all of these fibs do play out and they do end up hitting this level, who's to say that we don't continue going to the red zone after? And if you're in from below this level and you're able to keep your stop beneath that level to begin with, why would you give it up to have a higher stop that can't handle more of a pullback? You know, and obviously taking profit off along the way. The last consolidation, you can see everything that's happening right now is right near the 261 to the biggest pullback that we had around that triangle. We're just at the low of this old node here. If we put the volume profile on, we've come back down to hit the high volume node there. We could range the node. We have to consider like how much space, you know, it was using when it was used here before. So it totally used this entire, you know, portion here. So everything that it does past this point is not part of the node anymore. So anything acquired at the bottom of that node could be pieced off at the high. If you did catch it, depending on like, you know, what you might be holding or catching, it depends on situation. If you're looking for a hedge profit take on the bottom of the node, or the one thing I'm contemplating is whether or not there's going to be some sort of stop stealer. And if we did a stop stealer, would it look like a second drive? Could we make a 3 drives with the space that we have left? Be big second drive if it's going to be a second drive, but I don't think so. In the event that we see something like a 3 drives pattern, it can be tradable, but in the event that it doesn't form, there's nothing that can be done about it. That's a hell of a second drive if it is one. And the most attractive line is the red-yellow line ultimately. Of course, as we knew when I put these B points in, no stops were safe above them. They could go all the way up to the 261, I said, and come all the way back down. At the end of the day, it's not far off. But in the grand scheme of things, we know that any long trades that are taken above the daily POC are not as favorable to hold as ones that are below it. And the entire day today has been spent pretty much above the daily POC. So the entire pullback is almost halfway overlapped It's incredible considering most of where people, got excited about the dump, that's now taken back. It's true that holding is safer than trying to catch the bottoms. And that's what I intended for everyone since the beginning was never to give it up. Never did I ever say that it was an option to sell. I never said about the B points being a point where you got to get out or drag stops above. I specifically said you shouldn't drag stops above B points. That's the blue line right there. The red yellow line is the most attractive line of all the lines. All of this was just to pull back over people that bought in late, that didn't want to hold, that felt uncomfortable about the dump. Didn't matter if it wanted to use the time or not. If we end by breaking the red yellow line and end up on top of all this, then this is what I call a fool maker because it gets rid of people that have good trades, makes them get back in at spots that might not hold. Like it's true that only one of those B points hit, that we could hit the other ones in the future in the overnight session, and everybody that's holding from underneath the previous consolidation will still be fine, but all these people that caught this low won't be. And I'm like, that's interesting. Interesting. Doesn't mean it wasn't worth catching, but it's just not as safe to hold from as an even lower low. And it's true. But people don't think that in the moment, right? Like they get all tense and, you know, freak out about the dump that's happening against their holding because they think that like, there's something else going on or something. But it's not like I didn't say that hedging was a great option as well. Like these levels are still equally a risk to take us down in the future. Even though this one did it 100 times, doesn't freaking matter.